My name is Steve Haley. I am with the Mojaloop Foundation, and we're here today to talk about Inclusive Interoperable Instant Payment Systems, or IIPS, and how that relates to what's happening with the growth of the real-time Rails project in Canada, but also the growth of instant payment systems across the world. So interoperable instant payment systems really are taking off everywhere, not just Canada. And as this new version of a payment system develops, it's crucial to think about how we link them to each other to advance financial inclusion. And that means we need to think about providing access to instant payment systems, even to people who cannot, for any reason, get access to a traditional urban bank account. These could be immigrant populations, these could be rural populations, these could be low-income communities, people who are generally underbanked. And this concept has no borders. Underbanked people exist in every market, even places like Canada, the US, Europe, that tend not to be the focus of organizations like the Mojaloop Foundation. But it's particularly important that we take this opportunity to also think about how do we include all of these people, but especially for the particular use case of cross-border remittances. It has an incredible opportunity to reduce the costs and improve the user experience. So even in places like US, Canada, and Europe, when they decide to build an instant payment system, even if they aren't inclusive by design, they need to be able to connect to instant payment systems in other countries where that's not an option to be non-inclusive. It has to be inclusive because these countries are majority served by non-banks like wallets, mobile money, microfinance, and SACCOs. And so the global instant payment network has to include those types of accounts. In fact, according to the United Nations, remittances to African continent have doubled over the last decade, and we've seen similar trends in Asia as well. But in those markets, most people are primarily served by wallets. And so if an instant payment system, a national instant payment system in the US, Canada, or Europe is not able to transact with wallets in other countries, much less their own, then we're not going to be able to use those networks to bring down the cost and improve the access to remittance corridors. So to talk about that and what that looks like in a number of countries, we've got a great panel today of three esteemed experts. I'm going to introduce them quickly, and then they're going to go around and talk about themselves and their organization. And then we're going to talk about what are some of the challenges, but also the opportunities when we talk about building instant payment systems to be inclusive. So first, I would like to introduce Nyein from Thitsaworks and allow him to introduce himself and his organization very quickly.
Thank you, Steve. Thanks for having me. My name is Nyein. I'm Chief Executive Officer of Thitsaworks. We are a fintech based out of Singapore. We focus on bringing financial technology solutions to smaller financial institutions with the aim of powering financial inclusion using data and technology. Thank you so much, Steve.
Thanks, Steve. And next, Roberto Valdovinos from the People's Clearinghouse. Sorry about that, Roberto.
No worries. Thank you, Steve. Thanks, everyone. We belong to a network of community banks, and we work as technological agents for allowing them to interconnect between them and with external systems. So that involves remittances and also peer-to-peer local transfers, right? With a non-profit digital financial inclusion goal that is very important to us. So thank you for the invitation.
Thank you, Roberto. And lastly, Paula Hunter of the Mojaloop Foundation.
Thanks, Steve. I'm Executive Director of the Mojaloop Foundation. We are a nonprofit entity whose mission is to increase financial inclusion around the globe. The way in which we're enabling that is by building out a platform for companies to deliver financial inclusion, deliver instant payments in an innovative new way. Using open source technologies, what we've designed is a platform that is scalable and enhanceable, but is also really targeted towards those countries where they may not have a switch or a hub that fully meets and reaches the underserved. And this is a less costly and more open way in which we reach those audiences through partners such as Thitsaworks and others. We're delivering these solutions to developing countries in Africa and Asia, in Mexico, and really and anywhere that folks are interested in innovating with an inclusive instant payment platform.
All right, thank you, Paula. And hopefully what we'll be able to talk about is why things like Mojaloop are needed. It's because some of the challenges of actually building an instant payment system. So Roberto, I'd like to start off with you. You mentioned a network of community banks. And I mean, every country has different names for these things, different categories, different regulations. But I'd like, because you've been working with these community financial institutions for a long time in Mexico, can you start off by talking about what does that sector look like, and why is it so important that they are connected into the national payment system?
Right. Well, when we speak of community banks, we are referring to, in general, three figures. In Mexico, those would be SOFIPOS, SOFINCOS, and SOCAVs, but don't worry, I'm going to explain them. Basically, they are a subcategory of banks, which are very small banks with less requirements to exist, and also saving co-ops, right, which are similar to community banks. They tend to cover regions which are less metropolitan, so not the main capitals, and involve rural regions, semi-rural regions, indigenous communities, and isolated communities in general, where most commercial banks are not present or are barely present. So they have a very important financial inclusion aspect to them. That would be the sense of these communities, of these community banks and saving co-ops. Now, why do we think that it's important for them to be included in domestic payment rails? Before answering that, let me just give you some numbers. So right now we have an RTGS in Mexico, right, called SPAY, which is very powerful. It exists since almost, well, a decade ago, but it only has 71 or 73 participants, right? Why so little in a country as big as Mexico with more than 120 million inhabitants? Well, because the requirements for connecting to it are extremely complex. And until very recently, indirect participation was not extremely regulated, was not regulated, in fact. So that made it very difficult for small entities to participate and thus to offer RTGS, a real-time gross settlement system, to their users, right? Ending in many people not being able to access this service while others could access. So that's a big inequality we were seeing. And so when you see what it is and what it means to have half of the population not accessing these systems, you would say that they should all have access to it, right? Because these systems, national payment rails, are not something that could be asked as a luxury or a specificity only for some, right? It's really a matter of infrastructure. It's like a highway or like train rails, right? Something that everyone must have access to. So it's fair, first of all. That's why we think they should have access to national payment systems. And second, perhaps, because when you extend an RTGS system, like we're saying, to small banks and community banks and saving co-ops, well, in fact, that means you are accessing those communities, right? You're accessing indigenous communities, rural communities, and thus empowering and fostering a more dynamic series of exchanges in those regions. And that's essential for any country that wants to be developed quickly and in a sustainable manner. I think those two reasons could answer to your question. Thank you.
Thank you, Roberto. You brought up a great point about that a lot of these institutions generally have different requirements, different capital requirements. That inherently means they have different access to resources to connect. So you can say, you're talking about SPAY being very costly to connect to, but at the same time, you're talking about financial institutions that inherently have lower access to capital. It obviously makes it even more difficult for them. So I'm glad you brought that up. I think we're going to talk about challenges afterwards. Nyein, if we can transition to you, and I know that Thitsaworks works all over the world, and so you have experience both in Asia and Africa. Can you talk about how your experiences, starting in Myanmar, but then some of the other countries that you work in are similar and different than the way Roberto described Mexico?
I think Roberto could be speaking on my behalf, about our experience in Asia, because it's like a very, a lot of similarities, right? So in Asia, what we have seen, where I have worked, extensively in Myanmar, especially, a lot of a significant portion of the population is served by, the financial institutions that are not banks, right? We have non-bank financial institutions, microfinance institutions, right? They are, different type of financial institutions are usually, smaller in nature, with, regulations supervised by, different regulators, right? Who are servicing these populations. And this is how they assess the financial systems. So by not being able to access the domestic rails, they will be leaving them out, right, of having access to financial services that they will need, right, to have access to capital, have access to the remittances, and have access to ways of transferring money, etc. So I think it's really important that we help those smaller financial institutions be able to connect to the national domestic rails, right? So that they can send money to each other. And this is where I'm going to plug in the Mojaloop, right? Because we are a strong believer in Mojaloop technology and the benefits that it brings in making the domestic financial institutions interoperable to each other, right? In a smaller countries, right, where we have seen is that there are a lot of those the smaller financial institutions or the wallets who are not able to talk to each other, right, without having a rail right in between them. And of course, the bilateral integrations exist in some cases, right? But that those are very complex and very expensive to maintain. And this is where we really need, right, to have domestic rails that are interoperable so that we can bring them together. These smaller financial institutions are also quite innovative. They have innovative financial products, micro loans, loans that are geared towards the farmers, loans without collaterals, right? Those are the things that the traditional banks usually find very expensive to serve, right? Very expensive to provide. So they are not interested in providing, right, these services to the small farmers or people in the rural areas, right? So if we really want to have the financial inclusion, make a really impact in those emerging countries, I think having the small institutions connect to the national switches and also making them interoperable, I think is a key. Thank you.
Thanks, Dan. I mean, you brought up a good point when we talk about community financial institutions, whether we're talking about traditional microfinance, SACCOs, credit unions, is that most people think of these as primarily a place where you go to get a loan, and so about their lending products. And I think that's critical to bring up, that tends to be the excuse that we hear very often of saying like, oh, no, those aren't payment institutions; those are just institutions that give out cash loans. And if we continue to think about them like that, then we are missing an incredible opportunity for digitization of underbanked communities, and taking advantage of it. Because you can't say, well, the wallets reach them, so we're good, when wallets don't provide loans and savings. So a complete full banked community requires that connectivity. So I'm glad you brought up that point, because that tends to be one of the things we hear very often. Paula, you could go to a few different ways from this, so I'd love to hear your thoughts on how this looks from the Mojaloop Foundation and our mission in countries, particularly in Asia and Africa. But also, you sit on the board of a credit union back home and in the U.S. And I think I'd be curious. You can go either way. I'd be curious to hear your thoughts both in emerging markets, but also in the U.S. if you're willing to.
Yeah, hopefully I can knit them together. But look, when we looked at the problem of financial inclusion, we asked ourselves, why are the traditional banks not reaching these markets? And if you look at what happened in the microfinance world, they were not, the large corporate banks, commercial banks weren't able to innovate to the level needed and at the low value of the transaction that it would be compelling for their own profit requirements. And so what happened is innovators came up with new and unique ways to deliver those services via the microfinance services. And the transaction value was very low, not particularly compelling to a large bank that has, you know, an overhead structure that doesn't support those types of thin margins out to rural communities. They also had no awareness of how they could serve, particularly rural communities, which is something that you know, we're seeing more and more in the community banks. But there's also communities of interest, and in the U.S., credit unions call them fields of membership. It might be a company that everyone's associated with, or agricultural co-op, or there's some affinity between these groups. And what that helps is address some of the challenges in provide banking services, savings and deposits, et cetera, to underserved that a large bank can't address. For example, ID, credit risk, credit background, credit history. A lot of that stuff isn't available. In fact, one of our largest growing membership populations in the U.S. in our credit union is folks coming in from overseas that they just need a place to put some cash and get a direct deposit for their payroll. But if they don't have full immigration status, if they don't have all the credentials one would expect from a traditional bank to open a savings account, they can't get into the system. And that's where in the U.S. credit unions have thrived. From the Mojaloop standpoint, what we found is that the big banks just are not interested in serving these more disparate communities, the more rural communities. They don't have bank infrastructure. They're not thinking out of the box and saying, how can we use agents and other ways to reach these customers? So having you know, non-banks or non-traditional banks fill that gap is critically important. And again, they're leveraging technology in innovative ways that drives costs down. They're not trying to stand up a bank branch with all the brick and mortar and costs associated with that and integration back to the home office. They're trying to innovate in a very targeted way. And then, to your point, try and knit together a network with other players in the industry, which is critically important because, of course, people want to bank out beyond their community. Of course, they might want to be sending payments elsewhere in country or back home if they're a migrant or a migrant worker or an immigrant. So all of those things were a factor in how we designed Mojaloop to be very open and to be able to integrate not only with other Mojaloop instances, but with other systems in the financial sector to ensure that there could be flow across systems to reduce friction, but also hopefully to reduce costs. Because as more transactions flow, and as people are using technology that's lower cost to deploy, that can drive the cost of delivery of the services and transactions, and then hopefully the transaction fees as well.
Right, thanks, Paula. And so in terms of the driving those costs down, and I think one of the things that we focus on in the Mojaloop Foundation is, and in the Mojaloop community is the technical and operational costs, because those are some of the biggest costs. And those are operational costs for the hub to be able to actually communicate with these institutions, but also the technical and operational costs for the financial institutions, which are often overburdensome. So how can we bring all of those down? But first, before we can think about that, we have to think about what are those technical and operational challenges to participation that we're trying to solve. So Nyein, I want to go to you because prior to getting into this world of payments, you spent time basically digitizing the majority of the microfinance institutions in a country that serves more retail clients than the banking sector does in that country. And so you have a deep knowledge of what are the challenges of turning traditional microfinance into more digital microfinance. So, and even then, how do we, the challenges of of instant payment systems. Can you talk about those experiences and what are some of the key challenges?
Right. Thank you, Steve. Right. So, to summarize, right, what we do, right, in Myanmar, for example, right, is to help microfinance institutions digitize, right, within their own operations, right. We digitize, their backend, right, operations using a core banking system, right, that they can deploy to manage their loan portfolio, manage their client information, etc. Right. We also help the microfinance industry digitize their data collection practices and also manage their data through a data exchange platform for the microfinance institutions to share their data and also get the credit analytics of their borrowers who may be borrowing from multiple MFIs, right? But not reporting right to each other, right? So I think the digitization happens at within the MFI, right, itself, but also at the industry level. But then, when we started working on the payment solutions, right, digitizing the repayment, or digitizing the disbursement, I think it brings all of that together, right, to help the MFI not only being able to manage their loan portfolio, but also share information with each other through the data exchange, and also at the same time, digitize their payments as well. The challenge that we saw is that a lot of those microfinance institutions do not have the technical capacity in-house, right, to be able to deploy solutions that are needed to integrate with the data exchange platform or the with the domestic rails. Right? So they need a lot of help from the ecosystem. They need local system integrators who specialize in helping the smaller institutions, right? And understand their challenges and then making sure that they can connect to that. One of the programs, right, that we have to implement, right, as part of this exercise is that we have to start training the employees of the microfinance institutions and also the borrowers of those institutions with financial literacy programs, digital literacy programs, so that they are able to take advantage of those digital tools that are being put in place. I think that is also a very crucial piece, but sometimes overlooked. But I think it is crucial so that we can bring all of this together. Having the technology is not enough, but also having people who knows how to use the technology, how to maintain the technology is also very crucial. In terms of operational challenges, what I saw is, again, the human resource, right? Some of those microfinance institutions operate in very rural area, and they are not able to find qualifying loan officers, qualifying branch managers or IT administrators to manage their system. So it becomes like harder, right, to run their operation. One way that we saw very helpful is that by relying on the cloud-based infrastructure, that you don't really need somebody right at a branch level to maintain the system, because it is not hosted in that location, right? It is hosted in a cloud somewhere that can be maintained by somebody who is not sitting in the same location as where those institutions are sitting, but they can provide the services. So, I think the cloud infrastructure is like one key ingredient, right, to make all of this possible. But of course, having the resources, human resources and technical resources, right, to assist them, right, with the transformation is also, a key.
Before I let you off the hook, I mean, one thing is we're going to talk about regulation and policy in a second. So park cloud for a second, because I want you to come back to that. The other one is, one of the challenges I know you've had both in data exchange, but also in payments, is standardization of an industry that's generally not required to be standardized. And thinking about your problems with that with the microfinance industry, and overlapping that with now what you're having to think about with the requirements of ISO 20022. How far away are those worlds?
There are a lot of similarities, right? So now we are talking about ISO 20022 in many countries, right? A lot of institutions are interested in migrating, right, their messaging standard to ISO 20022, and I saw a lot of similarities between those conversations, right? and the conversation that we have had for many years, right, where we trying to standardize, how to record a national ID, right, for example, right, and how to record a name written in a local language but translated into English, and how does it, translate, right? So there are a lot of similarities in making sure that everyone comes on the same page, right? I think at the end, right, just like ISO 20022, right, one message, right, can be used in different ways, right, by different financial institutions. I think coming to terms with what is the common usage and what is the standard way of doing something, I think is key. One thing that I found that is very helpful is that when people realize that if they are not conforming to a standard, that they won't be able to participate, right, in a scheme or in a data exchange, right? It's a motivator for them to change, right? So I think that's one key. But sometimes we also have to meet them halfway, right? So there are times, right, we have to accept multiple formats that is translated by us, right, in the middle, and then store in a database in a standard way. But there's a translation layer that we do, right? So we accept multiple submissions, and then we translate them and then store them in a standard way. So there are multiple ways to handle that. But I think, meeting this halfway, I think a key to making sure that it is as inclusive as possible.
Thanks. And I'm glad you talked about the similarities. I was thinking about the differences, but I'm glad you brought up those similarities. But the main thing I think I'd like to make on that is that when we're thinking about standards like ISO 20022, if we're not asking everybody how they're going to conform to those standards, we're just going to have to do it again. So Roberto, I'd like to go back to the question of technical and operational challenges, and now working with community banks in Mexico, and starting to talk to them about onboarding into the People's Clearinghouse. What are some of the big technical and operational challenges you're facing, but also that they face in trying to connect into SPAY or CODI?
Right. Well, on the one side, we have the technical challenges or complexities, right? Like the diversity of systems and core banking systems that you're going to find in the sector in general. Well, it's massive, and we got to be able to work with all of them, or with most of them at least. There are even some cases where community banks do not have a core banking system, right? They're using an Excel sheet. But that's less and less the case. But I mean, there are something, just so we know what we're referring to. There's also infrastructure problems, but G also mentioned that with much detail, and it's true that cloud environments can be very helpful in initial phases and in every phase, in fact, to have a stable system that can work and with all the security required involved in a very easy way, because they are simply contracting a cloud provider. Okay, also communications. That's a problem we have. So let's say infrastructure of communications, that can be internet connection. In some cases, there are electricity problems, like the current can be intermittent. Well, that's less and less common, right? Those are things that have to be considered. And that's one of the reasons why we decided to work with Mojaloop, was because it was designed for, as we understand it, but probably Paula will be much more precise on this matter, to be able to iterate key instructions, right? When you're doing a transfer and having to communicate with an entity that maybe not be responding, right? The way it is redundant in trying to communicate with an external server is very useful, because what would happen in a powerful but limited RTGS in many countries is that if the transfer is not working right away, well, it stops. There's an error, and the transfer doesn't carry on, right? But we need a different scenario, because we're working with a diversity of contexts of infrastructures and core banking systems, right? So that's important to know. Now, operational challenges. Of course, every process like the one we are doing and the one Yi is also doing and referring to involves a financial literacy aspect, which, even though it's not a technological question by itself, it's essential, because we're basically changing the way people are relating to their money processes, right? To the credits they have, the money they must pay, every transfer they do. And doing that, it's rather easy with the youngest population. But unless we want to leave aside the elderly ones, we need to have a very strong strategy for financial literacy, and that takes a lot of staff and a lot of time. When you're a big commercial bank, that's not something you have to worry about, right? So, but that's something we have to worry about. Now, another thing related to this is that in many cases, we're speaking of long distances. And when you associate this with limited connectivity, in some cases, right, that complicates the process for this training, for this following up with local branches and local staff and local communities in general, right? Add to that, adding to that, maybe there's a last process, which is interesting. You spoke about standardization of processes, right? And you were referring to communication protocols like ISO 222, but that applies in every process. I mean, when you are working in a switch and in a payment system, you need to standardize absolutely every part of the process. And when you are finding staff for that process in that local community bank, well, you're gonna have a hard time because that level of standardization and keeping a record of every action and of every movement, it's not something people are used to. So it takes a lot of time, much more than just taking somebody in a metropolitan area who happens to work for a large enterprise, which is used to standardization processes. So all these are challenges that we're facing, but we're happy to face them, and that results in many funny anecdotes that we can tell in another context. But most of all, it gives you an idea of what are the challenges and the difficulties we have to fight to make this as beautiful and as useful as possible for communities.
Someday I would love to have a panel where we just talk about those anecdotes. I mean, I think that my favorite one is about a credit union that wanted to digitize and connect into a payment system, and somebody forgot to tell them that they would have to get rid of a policy that required the tellers to come up with 3 receipts for every transaction. And that included digital transactions. And so even when somebody came in wanting to do a digital transaction, they still had to give them to create 3 receipts for it, which kind of took away the purpose. But Paula, before we move on to policy, I'd like to give you a chance to talk about how Mojaloop addresses some of those. And Roberto did a great job of it just now, but if you can talk about some of the other technical and operational challenges for small institutions that Mojaloop tries to address.
Yeah, a recent example comes to mind. We were talking to a country in Africa that had a national switch deployed using a proprietary platform. And one of the biggest challenges they had was connecting other institutions to the switch. Not only was it time consuming, it was costly. And some of that cost was sent back to the proprietary vendor to figure out how to connect these banks into the switch. And what we looked at that and said, what we want to make sure happens is that as many institutions that the hub operator wants to connect to that switch can do so in a low cost and quick manner. We want more people to use the switch, not less. We don't want to create barriers, time, cost to connecting to the switch. And so with the Mojaloop open source platform, we can iterate on that connection challenge with our community that is represented by technologists, hub operators, bankers, et cetera, to say, what are all the issues associated with connecting to a hub, and solve it once and for all and make it repeatable and quick and efficient, rather than the hub operator at the central bank having to write a check to a proprietary vendor to guide someone into the process of connecting to the switch. So wherever we can leverage this pool of knowledge across our community, which is worldwide, and comes from a very diverse perspective from a banking and fintech sector standpoint, we can leverage that knowledge to tackle these complex problems, and everyone benefits. And that's really the benefit of taking a standards approach to problem solving. I mean, I wouldn't be using my Bluetooth headphone right now if there hadn't been a standards group where competitors got in the room and fought it out and agreed finally to a standard. Likewise Wi-Fi, likewise ISO. In many cases, these standards are developed by companies that would historically compete with one another, but recognize we need something that works for all. It doesn't differentiate us. It's just table stakes. We have to have this functionality as an underpinning, like a utility. And we'll differentiate elsewhere. But the act of connecting a financial service provider to a hub is not what distinguishes an entity as competitive or unique. It just has to happen. And so what we're doing is, again, leveraging our community to solve that problem and making it accessible to all.
Yeah, I think I love that you come from a standards background, so you can always tell great stories about that. I think one of the similarities with that, which we've been talking about standards on this panel a lot, is, I mean, if the only people who you invite to the room to come up with the ISO standard, for example, or the communication standard, are big urban banks, they're going to come up with a standard that works for big urban banks, and that's how all standards work. And I think so. That's a great way to frame it, of similar to other technology standards. But the solution might not be Mojaloop, but the solution is definitely make sure everybody is in the room. So I think I love the way those come back to standards. We're actually, as usual, talking way more than I was hoping to. So we're not going to get to most of my questions. In a wrap up, if you have big things you want to talk about, we can. I want to transition though into thinking about standards into the importance of cross-border remittances and the opportunity for connecting for a global network of instant payment systems. And I want everyone to talk about their feelings on that. But Roberto, I'd like to start with you, because my conversations with you about this opportunity have transformed the way I think about the opportunity. So can you talk about why is the cross-border use case so incredibly important? And in the context of the community banks that you're serving, why is it so important that we take this opportunity to connect community banks to instant payments for cross-border?
Thanks, Steve. Well, you mentioned like 20 minutes before perhaps one of the main issues here, right? That community banks and saving co-ops and local banks, right, small banks, are not only an option with respect to wallets or big banks, they are also the only ones which have a local connection and will offer certain products that are adapted to the local conditions. So that's very important. When we think of a local bank, that's the difference, right? The local bank is trusted by the community and knows what the community's context is, and thus can be more helpful and can have a real impact. That's very important, and that changes everything. Because then, once you have clarity on this aspect that you mentioned and that Paula also mentioned in a certain way, you can think of what the impact of cross-border payments is, right? Because then you can see how a cross-border transaction, especially when there are already connections between countries with migrants and sending home money, right? Particularly from the US, countries in Europe, Canada, to their countries of origin, certain amounts, right? Every month, every 2 weeks. What those amounts can signify for that community. So basically, the idea behind our project with respect to cross-border payments is that when you do cash payments, like right now, right, you use more intermediaries, you have higher costs because there's a certain important risk associated with the management of cash, right? And what's more, cash payments do not help that much the community. What we've seen, and it's a funny counterintuitive situation, is that communities receiving the most remittances tend to end up empty, right? Most of the community leaves for a series of reasons. But one of the studies we've been working on has gotten us to the conclusion that communities receiving remittances but having no local production itself tend to have a form of inflation that is analogous to what we call the Dutch disease, right? But at a regional level, so that things become more expensive. But there's no production, no job making that justifies that inflation. So the result is that those regions will become less competitive, right? And although the remittance is very useful for the family receiving it, it's not useful in a long-term perspective for the community, something completely counterintuitive. Now, I'm mentioning this, I'm not out of the subject, because what I want to point here is that when we manage to do cross-border payments that involve these community banks, right, at these communities we're speaking of, that makes an incredible change. Why? Because suddenly all this money, instead of getting into people's hiding places, right? It becomes part of those local saving and community banks, saving co-ops and community banks. So they have more capital to lend and capital to invest, right? And thus they can offer more credit opportunities for local productive projects, and thus there's more employment and more local opportunities. And thus you could even say less inequality, because while the cash remittance would only have an impact on the family receiving it, now through the intermediation of the community bank, the impact of the remittance involves the whole community. So we're seeing a situation where, in a systemic way, right, we're bringing more regional well-being and much less economic migration. So even from a public policy perspective, I think every country in the world should be supporting this model. You don't have to give more money to poor areas migrating. Let's speak of Central America migrating to the US. Rather, build community banks, offer them serious, powerful payment rails, and allow remittances sent by their families in the US to be the major impact for bringing sustainable development and thus less economic migration. So I think that's the main point, right? And the hard part to swallow or to see is that if you do the same thing with a big bank or a great fintech solution that is very practical, perhaps in other areas, they do not have that impact because they have no local involvement and they have no local connection, as we said in the beginning. So no matter, it's not only a matter of bringing digital payments to the table just by itself, but it's rather of making those digital payments inclusive. And that is precisely the point of bringing into the table and making part of this networking of this structure of this system, all the local financial institutions which actually work with the people, right? And then you can have a very powerful positive impact in them.
So Roberto, thank you so much for giving us that. And I think, unfortunately, we are completely out of time. But I think that Paula and me would probably agree that that's probably the right comment to leave this on. So with that, I want to apologize that we didn't get a chance to get into a lot of things we want to talk about, but very much thank you to Paula, to Roberto, and to Nyein, and to the Payments Canada team for letting us talk about this. We very much hope that real-time rails develops in this way. And if anyone working on real-time rails or instant payments in Canada wants to talk to us about how we think about these things from a standardization across the globe, please reach out. So with that, we can close the panel. Thank you so much for your time, everybody.